All right, for any of you who don't know me, my name is Jordan. I am a software engineer by profession. I started investing in real estate about 9 years ago. And on my channel, I talk about investing in real estate, finance, um, all kinds of stuff like that. So I've been on paternity leave for the last, I guess this is my 8th week. I go back to work next week. And while I've been on leave, I got really interested in the market for Pokemon cards. I've personally never been interested in Pokemon before, but uh, you've maybe heard Pokemon cards are extremely popular right now. A lot of people spending pretty significant amounts of money on buying and collecting Pokemon cards. And as I was thinking about it, I was really reflecting on why I enjoy collectibles, even if not Pokemon cards, though maybe more on that later, and how much, if I were to buy collectibles or when I do buy collectibles, how much money I'm willing to put in. And as I was thinking through that, this sort of matrix occurred to me that I'm going to talk through here. And I was thinking about collectibles, and I was thinking how they're beautiful. Maybe not every category of collectibles is going to be beautiful to you, but if you like nice watches or high-end purses or jewelry or art, those you probably like it at least in part because you find it very beautiful or aesthetically pleasing. And they're also exciting. There's usually some rarity to what you're trying to get, so you have to really work hard to find it, talk to people, build relationships, and it naturally creates stories around the thing that you're collecting and within the community that also collects the same thing you do. So I started thinking about investing in general and how on one side we have investments that are sort of bland and boring. And we'll talk about more of those in a minute. And on the other side, even past collectibles, we have not investing, but gambling, which may not be aesthetically beautiful, but it is really exciting. If someone's gambling, it's usually because they find it pretty interesting and exciting. So I just want to talk through how I think about these different categories and how if how certainly how I think about where I put my money, and maybe you find it useful as well. So over here on the bland and boring side, I thought, okay, well, the most bland, boring thing is an index fund. An index fund is where you take some money. Let's say you take $1,000, you invest it in the stock market, and your $1,000 gets split up between 500 or maybe even more companies. So a small amount of the $1,000 total gets put into each of those companies. You don't choose where it goes; it just automatically gets allocated there. And then what happens is, let's say 1 out of 1,000 companies does terrible and it totally goes bankrupt and it's a huge fraud. And 1 out of 1,000 companies becomes worth 100 times what it was worth over the time that you hold it. Those will, we won't say they'll average each other out, but the company that would have been a total loss now is not that big of a deal because it was just one small part of your investment. And the company that blew up huge, also, you're not going to feel as much of the effect of that since your investment was diversified across so many different funds. And of course, many in the middle will make some amount of money. If you're investing in something like an S&P 500 index fund, you might expect to make 8 to 12% in a given year. But you can pretty consistently do that year after year. Of course, you're going to have some really good years. You might have some not so good years. But you can reasonably expect that after 8, 9, 10 years of investing in an index fund, you're going to come away with more money than what you started with, and probably pretty significantly more at that point. But it's going to take a while. Investment or index funds, when you go to buy them, you can buy them Monday through Friday, 9:30 to 4, through any kind of broker. And when you hold them, you receive dividends. Many of the companies in the index fund pay out every quarter or every 6 months some amount of their profits that go to you as an investor. You really have no holding costs. You just log on to your brokerage account and you will see whatever shares you own there. And they can't rot or break, and they really can't be stolen. So you have a lot of peace of mind and no active maintenance of what you've invested in. And then when you want to sell, you can sell within milliseconds, anytime, Monday through Friday. And another really good thing about buying and selling an index fund is you can buy in small increments and you can sell in small increments. So in that hypothetical example where we invested $1,000, if you need $200, you can just sell $200 worth of your $1,000 and keep the rest invested. From there, we might think about individual stocks. So maybe we want to invest in American Express or Home Depot or Apple, something like that. We have the same characteristics of buying and selling, but our holding now becomes a little more interesting. We might want to follow trends in that industry or company reports or staffing changes. They have a new CEO or they're opening new stores. And by the same token, we're going to see more uneven returns. So here we really will feel if the company does really well, we might see the company jump 7, 8, 10, 15% in a day. And likewise, we might see it fall 15% in a day. Many companies, of course, have gone bankrupt or gone out of business before, and that could always happen as well. So we're exposing ourselves to everything that, for good or bad, goes on in that company. Now, as we can see that we're moving toward beautiful and exciting here, owning an individual stock, or say 5 individual stocks versus 1,000 different stocks in an index, it's much more interesting and exciting. We can really watch the prices move every day. We can think about how a new product launch is going to affect that investment. And we can start to find some community around here where maybe there's other people that invest in the same company and have opinions on it and want to talk about it. From there, we can move to real estate. Real estate is different in several ways, but um, it's still an asset that we will okay, so it'll take much longer to buy real estate, something like 6 to 12 weeks. It may take longer than that. And when we go and buy it, we're going to pay significant closing costs. So say we buy a property for $250,000, we might spend $10,000 to $15,000 just on closing costs. That's money that we're spending in addition to whatever the purchase price is for the property. With real estate, it requires maintenance, it requires insurance, and we receive rent. Typically, at least, we're going to receive rent. Real estate, I mentioned I started investing in real estate about 9 years ago. I always enjoyed real estate long before I owned any of it. I think that's similar with many people. And I find, and I think it's a common thing to find real estate both beautiful and exciting. Not every piece of real estate is beautiful, not every piece of real estate is exciting. But if you go to a party and you say, hey, I invested $1,000 in an index fund this week, people are just going to kind of look at you with a stone face. If you go and you talk about individual stocks you invested in, you might find some people that want to talk about that. Not the most fun party chatter, but it could be okay. If you go to almost any party and you say you're looking at a new property to buy and what you're thinking about it, it's been my experience, at least, that many people, whether they own real estate or not, find that interesting and compelling, and they want to talk about where it is and what's on the property and what the condition is like and what the architectural details are like and what it might do business wise. There's so many different angles to enjoy real estate that we can see that we're clearly moving more toward the beautiful and exciting. And then when we go to sell our real estate, it's going to take 6 to 12 weeks to sell, just like it took to buy it. We're going generally to pay a 6% commission to realtors who are involved in the transaction. Selling requires time and effort in contrast to selling stocks, which really just requires a click on your computer. And then you always have a risk that it might not close. Somebody might have made an offer, they might have put earnest money down, but for some reason along the way, they're not able to finalize the transaction, and you go right back to the beginning to try and sell it again. This is what we might call much less liquid, meaning it's much harder to turn the real estate back into cash or cash into real estate versus stock, which you can turn into cash anytime you want if the market is open. All of these 3 investments on this left side produce income. So whether it's index funds and individual stocks, where a company will pay out dividends, again, that's a portion of their profits that they're giving back to people that own the stock, or owning real estate and collecting rent on generally a monthly basis. When we cross this line, we move over to no income. And I think that's kind of interesting how the things that produce income are on this more bland and boring side, and the things that produce no income are perceived to be more beautiful and exciting. So the next category I wanted to draw out here is precious metals. This would be if we're buying maybe gold or silver coins or jewelry or really any form. I mean, there's many things you can do with precious metals, which is one of the attractive things about them. But when we buy them, they just kind of sit. Or maybe you can wear it or put it on display, but it's not producing anything. It's never going to send us a check. It's never going to pay rent. So when we go to buy precious metals, we can buy online or we can buy from a dealer. If you've maybe in your town you've seen someone with a sign that says "I buy gold," that's a generally a precious metals dealer. Or you can buy it direct from someone on like Facebook Marketplace or other places online, Craigslist, something like that. You can meet with somebody and buy directly from them. They, when you're holding precious metal, they require little work. They provide no income. They do look beautiful, and they're tactile. You can hold them in your hand. You can flip them around. You can wear them as jewelry. You can do a lot of enjoyable things. Things again that are a little more beautiful and a little more exciting than some of these other categories of investment on the left. When we go to sell, you can sell precious metals relatively quickly. There's always a market for silver and gold. You will pay a fee when you go to sell it, and you generally will have to go somewhere. There's a few websites where you can go on and send it, but even then you probably have to go to the post office. So you'll have to go somewhere to a dealer or some kind of marketplace where you can sell it. Okay, then we come back to where I initially started, which is with collectibles. So we don't have to go through all types of collectibles, but I obviously mentioned Pokemon cards, could be baseball trading cards, could be antiques, could be high-end watches, purses. I don't know. There's many categories of collectibles that you could look at. When we buy collectibles, we can buy online, buy from a dealer, or again buy directly by going on, say, maybe we have a friend that wants to sell to us, or an acquaintance, or we go on Facebook Marketplace and we find the thing that we want to buy. Collectibles require work. They require work to find them, first of all. Then they require work to store them and take care of them. Typically, they require work in that we have to keep a pretty good eye on the market, or at least be aware of the market. Now, saying that, that usually is a feature, not a bug. If you want to collect something, it's probably because you like to stay apprised of what that market is doing and talk to other people who collect the same thing. Collectibles provide no income. They are aesthetic. Again, kind of like we talked about, you can hold your gold or silver in your hand and it tends to be very aesthetic. Here again, we have something that's beautiful that we can hold or look at or wear. They're really fun to talk about. Now, not every collectible is going to be fun for everyone to talk about, but if you're collecting something, it's probably because you love to talk about that thing. The things that I enjoy collecting are things that I also love to talk to other people who enjoy that category of collectibles about. And they should go up in value over time. We can hope for that. However, it's important to realize that most collectibles eventually will lose all of their value. And I'm not thinking of a great example right now, but a great example is Beanie Babies. Beanie Babies is a classic example. When I was growing up in the 90s, Beanie Babies became very popular. People spent an inordinate amount of money to try and collect them and own them. And pretty quickly, the market was saturated and people lost interest. And I couldn't tell you for sure today, but I don't think hardly any Beanie Babies have retained their value. You can go Google it, look at them, and see what they looked like. But not collectibles are going to go up in value for some period of time, maybe forever, but often they're going to eventually lose their value as the community that collects them loses interest in that thing or frankly dies, gets too old, and nobody else wants to buy them. When we go to sell collectibles, they sell slowly. Generally speaking, they sell slowly. You'll have to go find a dealer who works in that category. You'll have to see if they want what you have. They may or may not have the money to buy it from you or have the interest to buy it from you. You can go find someone to buy it from you directly. You might spend weeks putting it on eBay or Facebook Marketplace or whatever, hoping that someone buys it. And then typically when you sell, you're going to sell at a discount. So if you think the market value of a particular collectible is $1,000, you're going to be very lucky to actually get $1,000. You're much more likely from a dealer, you might get 65, 75% of the value. If you sell it directly to someone, again, you're probably going to get 85, maybe 90% of the value. There's a much smaller market just by definition in whoever is into the collectibles you're into is a much smaller group of people than people that are interested in real estate, individual stocks, index funds, or precious metals. And lastly, when you go to sell collectibles, the price is very sensitive to the overall economy. This is true of all categories to some extent, but one of the first things people cut in their budget would be money they spend on collectibles if they're worried they might lose their job, or they have too much debt, or overall the economy is in some kind of recession. So you expect this to go first. And then while this last category is not investing, I do think it fits on this spectrum well. We talk about gambling. Gambling has always been popular, always will be popular. Recently meaning the last 5 to 10 years, with more online sports betting and now propositional betting through all kinds of websites, there is a lot of money going into gambling. It's very easy to do. You can do it online, go to a casino, get together with some friends, make a bet with a friend, whatever. It requires no work. It provides no income. And here we don't mean the outcome of winning it. We mean that when you make a bet, it's not going to pay you every day or month or week or year like real estate or owning a stock would. It hopefully at least is a very exciting experience. Typically, of course, people get excited about things that they like to gamble on. It's very fun to talk about with other people who enjoy your area of gambling. And you should expect to lose over time. There may be some very small exceptions to this, but most people understand that if they're gambling, while they may get lucky and be up on a particular bet or series of bets, over time you will lose all of the money that you put into it. Though it may take a while, you may get, you may get enough back that you can say do many bets with $1,000 before you've lost all that money. And there's no selling required, right? The bet closes whenever it does, and you either get some money back or you don't. So I'm 41, and I started off in my life, I think it's fair to say, quite poor. And it used to be incomprehensible to me, like, why would I put money in an index fund? Or not, I shouldn't say incomprehensible, but so bland and boring that I had a hard time really even wanting to do this. Like, okay, so you're telling me if I put $1,000 in and we have a 10% year, then I'm going to make $100. $100 is, maybe when I was younger, $100 was probably a day's pay or something like that. So I'm going to invest $1,000, wait a whole year, and then I'm going to get, say, 1 day's pay in return for that $1,000. Yeah, very, very unexciting, very slow. And so then you might say, well, I don't want to do that. I'm going to go to individual stocks, and I'm going to pick stocks that I think are going to grow by 3 or 4 times this year. And now my $1,000 is going to turn into $3,000 or $4,000. Great if you can do it, but often that will not work out, and the same company may lose half of its value, and now maybe we have $500 at the end of the year. Now we've lost 5 times more than we could have maybe expected to make over here. I'm not, just for the record, I'm not against any of these categories. I do at least some of all of these 6 things. I think it's more just important to build a mental map of how each of these categories works. And then again, in a minute, we'll talk about how we might choose to allocate money to these things. And while real estate can feel inaccessible, especially to someone like me back when I was, even 30, where I really had very little money that I could put into something like real estate, it can be a much faster way to grow wealth, not least of all because when we buy real estate, we're often putting down 10% or 20%, and we're getting a mortgage for 80% or 90%, which means that a $250,000 house that goes up even by 4 or 5% is a significant return on the cash that we invested. And then we come over here to precious metals. We don't, although precious metals have done really well in the last about year, typically these aren't looked at as being the most volatile investments or things that are going to go way up or way down in a year. But if you think, well, I really want to have something I can hold in my hand, something I can own and feel, then I think it can be attractive from that perspective. And then we get to collectibles, and I think it's very easy, especially if you already have an interest where in a category of collectible that's growing a lot, to think, oh, I shouldn't do any of these 4 things. I should put a bunch of money into my preferred category of collectible and it's going to go up by 50% in 3 months, and then I'm going to sell it. And great. Again, I don't have anything against that. However, I do think that is a fairly unlikely scenario in most cases. And what is at least as likely, if not more likely, is it might go down by 50% or even more than that in the same amount of time. And then lastly, again, here I think we kind of have an epidemic of people saying, well, I don't want to do any of this. I can double my money gambling in a weekend or hours or during one game or whatever it might be. And many people are um, not accomplishing that and not seeing those results with gambling. So whenever you're thinking I should put some of my money into gambling, maybe that's not the way we say it, but you're thinking I want to gamble, I want to turn this money into something more, or likewise with collectibles, oh, I should buy this collectible because it's just going to go up in value. I think it's kind of useful to think of this as a waterfall where we want to start by putting some money at least in an index fund, even though it's bland and it's boring. If you don't have any money invested, and assuming you have no debt and a little bit of savings, then start filling this index fund bucket first and put some money in here and limit almost everything else. And then once you get a little bit of experience here, at least, if not even more. Again, if you stop here and never did any of these other 5 things, I think you do great. If you consistently put money into an index fund over the course of your life, awesome. We can talk about more about what that looks like and some other tax advantage ways to do that. But if all you did was this one, then you would very likely be set for your retirement, and very likely then have even more money to leave to your children or other causes or people you care about. And then, if you start getting a little comfortable here, you say, okay, well, actually, I want to try now investing in individual stocks. So what I would think is I'm going to leave, say, 80% of my money here, and I'm going to carry 20% of the money over here to start investing in individual stocks. And you see how that goes for you, and hopefully you're starting to experience something that's a little more exciting. And then once you're a little established in index funds and individual stocks, or a lot, and it makes sense in your life, then starting to put money into real estate. Often people, of course, want to buy a house to live in. It's a great place to be. So we move some money into real estate, and hopefully we don't have to totally liquidate the index funds and individual stocks. And if we do, then again, I would say, okay, even if you put all of your money into a house, then before you go further on this way, you want to go back and sort of refill those buckets, put money into an index fund and individual stocks. Make sure you're able to continue, of course, to pay your mortgage on the real estate. And if all that's taken care of, then we move on to precious metals. And I'm not saying we need an equal amount. In fact, I almost imagine it like we want to see less money in every category as we go, ideally. So if something like 50% of our invested dollars are in index funds, and then 30% are in individual stocks, and then 20% are in real estate, that would be 100% of our money allocated between those 3 things. And then we say, okay, well, now I want to put some in precious metals. Okay, well, maybe we take 1% from here, 1% from here, 1% from here, and now we put 3% of our money in precious metals. And if we've got all that set up, then great. Then we move to collectibles, and you say, great, I want to start collecting things that I like, and maybe I want to put some serious money into them. Okay, but let's keep this at, say, 3% overall, and maybe this becomes 5% overall, and then this becomes 20%, and the index funds and individual stocks are whatever the balance is of that, say 70%, something like that. And then finally we get up to gambling, and here, for me personally, I'm never going to put more than 1% of money I have to that I'm, after all my bills are paid and everything else, if I've got some money left over that can be invested, you're not going to see me put more than 1% of that money into gambling. I'm personally not that into gambling. I shouldn't say that. I do really like to play poker with friends and things like that. And but like I said, when I put money on the table, that's going to be less than 1% of the money that I have to invest. And if that means playing with friends who are more poor, then great. I'll play with friends who are more poor, because I will not put much money into this category knowing that I'm likely to lose over time, and that it's very fun, but it is not a solid way to build wealth. Lastly, I will just end on the idea of thinking when we put dollars into any of these things, we think, well, if I were to die someday and whatever I did here, let's just assume it was exactly the same when I died, which category would the people that I love be happiest to receive? Would they be happiest to take on whatever outstanding bets I have? Probably not. Would they be happiest to receive the things that I love to collect? Maybe. And if so, I think that's a wonderful thing. If you collect something and you have someone in your life, or whether it's a son or daughter or someone else who also enjoys that, and you know that they're going to enjoy receiving those collectibles, I think that can be quite a beautiful thing. But it's the exception, not the rule. For the most part, you're going to enjoy something. It may not even have value by the time you leave this earth. And even if it does have value, it might just go to someone or some organization that is really just going to liquidate it and sell it because they want the money. Precious metals, I don't think there's anyone who's unhappy receiving precious metals. If you do end up giving some gold and silver to your children or other people you care about after you leave the earth, then I think that's totally fine. Real estate, again, who doesn't like receiving real estate? And index fund and individual stocks, any heir will be extremely happy to receive them. So I just think that's another way to think about this, that what you find beautiful and exciting is probably not the most valuable thing to pass down to the people that you love. And those things that are bland and boring are likely to be the most appreciated by those that you love, if and when you have the opportunity to pass them on. All right, well, that's it. I just thought this was kind of an interesting way to think about this. And if you have any comments or questions, leave them down below.